If you can hear me, go ahead and type a yes on the chat for me. All right, and welcome to today's Trade Friday Market Movers, the July NFP report. I'm your host, Giovanni Benecourt, a senior VIP market analyst, market educator, and demonstrator of strategies with Vantage Markets, bringing 20 years of experience as a commodities trader in CFDs. I hold the Series 3 license and also a CMT candidate. Now, let's real quick start with the agenda for today. So, let me get the PowerPoint presentation going. Real quick here. All right, so let's take a look at what we will be talking today. We'll dive deep into how the upcoming MFT report, which is out doing about 29 minutes now, which can influence key global markets, including equities, commodities, FX, and crypto. So we want to learn how that will move. So before we begin, let me just share with you our Vantage disclaimer. The information, context, opinions which are expressed in the presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. All right. With that being said, again, I'm your host, Gio Benecourt, and the agenda for today: short introduction, understanding the NFP report and its market relevance, market scenarios and broad impact by NFP result, detailed trading strategies for key assets, risk management and summary, and a Q&A session at the end. So before we get started, let me just share with you about Vantage. So the markets that we offer, over 1,000 instruments, chart patterns over 100, technical indicators and drawing tools over 100. We offer Forex, CFDs on indices, shares, CFDs on shares, commodity CFDs, and crypto CFDs. What we stand for: lightning execution, lightning fast execution, award-winning 24-hour support, intuitive tools, and global connectivity. One thing that I want to start by giving you some pointers will be, you want to identify clear, consistent trading habits. One of those habits could be being in front of your computer at a certain time. This will help you build or develop a daily routine. You want to be before your PC with your charts open, seeing how the markets move prior to the open, to the session that you're going to trade, whether it be New York or the London session. That creates a routine. Sometimes people may not want to trade more than 15 or 40 trades per week. So if you look at the low side, that'll be 3 per day. The most, that'll be 8 per day. Then sometimes you want to look at time and simplicity. Perhaps you decide just to trade CFDs on stocks, and specifically around earnings time, earnings season, which the stock will bring volatility, and that's what you want. So you can make a trade and obtain a profit. And obviously be comfortable with the prospect of losing money So if the market goes against you, be cool with that. Be comfortable with that, because you will have losing trades. Then we have obviously our subjects for today. So let's take a look at what we'll be discussing the scenarios if the report comes in basically at consensus. So basically this is the baseline. It's typically seen as neutral or slightly dovish because the number supports moderate economic growth, but it's not strong enough to push the Fed into tightening immediately. So expect the US dollar to mildly weaken, equities to stabilize, and a moderate risk on environment where growth assets can rebound after initial volatility. Okay, and then much lower than consensus, which roughly will be below 72,000 jobs, and this signals a weaker labor market, raising concerns about a potential recession or economic slowdown. So the market reaction tends to be dovish, and the US dollar weakens sharply, and safe havens like gold and silver rally. Risk assets like tech-heavy indices and commodities sensitive to growth may sell off. And then we have hot reading above 150,000, 140,000. So if the consensus is 110,000, that's your baseline. So a strong jobs number can trigger fears of overheating, potentially delaying Fed rate cuts or even prompting hikes. This tends to be bearish for equities, specifically high growth stocks. While the US dollar strengthens, commodity prices can be mixed. Inflation sensitive commodities may pull back, while energy prices might rally on growth optimism. Okay, so that's the readings that we be expecting for today. So the trading strategies for major assets like NASDAQ 100, S&P 500, the Dow, WTI, the crude oil, natural gas, precious metals, copper, Bitcoin, currency pairs, EURUSD, Pound USD, and the US dollar index are what we're going to be covering in this session. So this session will provide actionable insights you can use for trading plans immediately after the NFP is released. And once I'm done presenting for the first 30 minutes before the NFP reading is posted, we'll have a Q&A session to allow the dust to settle after the number is out, and then we will look at the charts of each asset so we can potentially find trade setups. Now, remember, this is only educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Advantage does not guarantee the accuracy or reliability of the information provided herein. Right? So, let's get into it. So, understanding the NFP report and its market relevance. So let's start with a quick overview. The non-farm payrolls, or NFP report, right, measures the net number of jobs added or lost in the U.S. economy, excluding farming. It's a critical indicator of economic health and greatly influences Federal Reserve monetary policy decisions, especially on interest rates. So for July 2025, the consensus forecast is around 110,000 jobs, a moderate gain, signaling steady growth but not overheating. The unemployment rate is expected to 4.2%. Now, why does this matter so much? Because it helps market price expectation for interest rate changes, investor sentiment, and economic momentum. So a strong report can signal inflationary pressure leading to Fed dealing easing or even tighten, while a weak report can fuel fears of an economic slowdown and push the Fed toward cuts, which is something that Trump wants. Today, Trump actually made a pretty strong remark on Powell, calling him a moron. So that's pretty rough. But based on the release, markets can react sharply and sometimes abruptly. So understanding the scenarios, having a strategy is crucial to managing risk and capturing opportunity. So some of the market scenarios and broad impact by NFP results. Well, then let's talk about, we already talked about actually the three key NFP data scenarios and their broad market impacts. The consensus, much lower than consensus, and a hot reading. So always remember that the initial reaction can sometimes be exaggerated. So it's essential to watch price action carefully post-release and adjust trades accordingly. Now, let's take a look at trading strategies for key assets. Let's get granular. Now, here's how the major assets class based on these scenarios, with some practical tips. Okay, so in front of you, you have this strategy, and it's gonna come up to basically each point or each scenario where we could find consensus. And if we do have consensus, then we could most likely, hold on for a second. Okay, cool. So for the NASDAQ 100, what can we expect for if the consensus of reading is within consensus? So the strategy will be to trade the post-release range, wait for a break above recent high lows for confirmation. Range will be likely. If we do have a much lower reading, let's say 75, 80,000, go long, buying the dips. So this will favor growth, tech, or if you too dovish, you can also sell rallies, so target support levels, which are tech vulnerable. Now, if we get a hot reading for the NFP, short on initial spike lowers. Look for reversals if buyers step in on strong growth narrative. Then we have the S&P 500 for a consensus. Look for reversals or fade moves after the first 10-15 minute volatility. Set tight stops. Go long, overweight cyclicals and tech, or sell target at 1.5% or greater drop. Watch for break of support. That's something important, because support, understand, means that there will be people buying. They're buyers. Support are buyers, and resistance are sellers. Okay. Then on a hot reading, short knee-jerk weakness. Consider buying the dip if market interprets that as positive for growth. So we do have a hot reading. Hey, short or knee-jerk weakness once we see that spike on the asset. Dow. Let's take a look at it. Let's talk about the Dow. Same as the S&P. Focus on the broader trend and key support at recent lows. If we do have a much lower reading for the Dow, or for the NFP on the Dow, go long. Blue chips, industrial, and you could take a look at selling defensive sectors that could get hit. Then if on hot reading, sell initial spike of if market interprets higher rates as bearish, cover if momentum abates. So that will mean that if the market finds support after an initial spike and then drops, keep that in mind. So crude oil, trade within technical levels, support near, I will say, 64. Now, resistance at, where the market will have it at that moment. So we'll take a look at a resistance level of $70, psychological round value, right? Now, if a much lower reading, sell on knee-jerk demand, worries, but watch for USD-driven rebound. Then on hot reading, buy the breakout above key resistance if momentum confirms. Watch volumes for confirmation. Nat gas, consider reading for nat gas. Use a wait and see approach. Avoid overreacting to first moves, and watch for rebounds from key support. Nat gas, since Trump came out and claimed that he had a trade deal with the EU over 750 billion of energy, well, nat gas is in there, and obviously for that amount they wouldn't want to be able to trade on a high value of nat gas. So pressure is on nat gas. Obviously there's a demand, but they want to be able to have that value or the cost of nat gas lower. So keep that in mind. Then if a much lower readings comes out, mildly short, demand fears dominate. And a hot reading for nat gas, well, buy the dips if broader commodity rally ensues. Avoid holding if RSI is overbought. So that's one thing we want to keep in mind. Now, that doesn't mean it's not going to continue to move push higher, but again, the consensus for this is looking to be on the downside. All right, gold. On a consensus reading, gold range straight using support resistance. If gold holds above recent support after the noise, look for a contrarian long. Now, much lower reading for gold, go long. Expect strong rally on USD drop. Then we have a hard reading for gold, which will be short gold on break if key support after data, but watch for reversals if inflation remains subdued. Silver, which has been trading lower silver, much more than gold. Similar to gold, more volatile, so smaller position sizes for silver. Then on the much lower reading, buy aggressively, stronger move than gold. On a hot NFP reading for silver, sell initial knee-jerk reactions, cover if dollar strength reverses. Then copper on a consensus reading, range trade, bias to upside if global growth optimism remains intact. Much lower reading, then wait for confirmation, play a rebound after Fed during update. A hot reading for copper, buy on strength if risk on persists, actually quickly on reversal. Copper is a commodity that is highly used, highly demanded. It is in everything. And for all of this AI boom, copper is a much needed commodity. So I'm looking for copper in the long term, $6. Let's see what will happen. Bitcoin. So on a consensus reading, Bitcoin, stay clear of the first 10, 15, 30 minutes. Bitcoin does trades and swings by the thousands. So keep that in mind. So direction of bias often follows equities in a dollar move. Now on a much lower reading, Bitcoin, go long, play for volatility breakout higher. On a hard reading, well, the opposite. Short on USD rally, scale in on rebound if equities stabilize. That's a key right there. Now, on the forex and the currency parts, range bound for the Euro USD on a consensus. Trade the initial whipsaw, look to play mean reversion. And the mean reversion, if you use the Bollinger Bands, is the middle line, which is a 20-day moving average. The much lower reading, the Euro, go long, Euro USD. So you buy, looking to ride USD weakness. And then hot reading for the NFP, that will be sell on initial drop. Consider counter trend only if USD strength fades. Then on the pound, on a consensus reading, hold tactical long. On a much lower reading, go long, the British pound USD, weakness in USD. If a hot reading occurs, well, short the pound or the cable. Consensus reading for the US dollar index. So quick mean reversion trades within established range on that consensus. Much lower reading, well, sharp drop, short USD target, technical support. And a hot reading, play momentum breakout long on USD breakout holds. So that's the strategy for today. If you like, you can take a screenshot of it so you can have it in front of you. Now, some practical tips. You want to use some tight stops, especially in the 15-30 minutes post-release when volatility is highest. So avoid large positions immediately, right? You wanna do that. You don't wanna high trades, so avoid large positions before the NFP data to limit risk. Look for confirmation with volume and candlestick patterns before committing. So for commodities and crypto, be extra cautious due to their higher volatility around that economic data. So let's talk about risk management and summary. So trading the NFP data is an exciting but challenging opportunity, and the key to success lies in disciplined risk management. So with us, you have the ability to change the leverage on the account. So you might want to do that. You want to reduce leverage just before the report. Volatility can spike and spreads widen. Don't chase the initial move. Don't fall for that forsaken word of FOMO, right? You don't want to fear of you don't want to be having that fear of missing out. And so I guess you want to be scaling into positions gradually, right? Scaling into positions gradually as the market confirms direction. Always set a stop loss around key technical levels to protect capital. That's something that you really do want to be able to do. So keep that in mind. Now, also, when it comes to emphasizing risk management, depending on the trading capital that you are using, that is being applied, I have a little chart on the left hand side here, which if you have a trading capital of 10,000 and you risk 1% of that, that'll be $100, euros, pounds. And if you risk 2%, that would be 200. And obviously, depending on how much more you have, that'll increment. But you always want, obviously, to risk 1%, but always have a 3-to-1 win ratio. So meaning that you for $100, pounds, euros that you are risking, you're looking to make at least 300. That will make your account grow, steadily growth. Because let's say, for example, that if you follow through the 3 trades per day, the minimum, so 15 per week, and on those 3 trades, you happen to have 2 losing trades, right, and just 1 winning trade at 1% risk, that will mean that you have lost 200, but on that winning trade, you have recovered those 200 and made $100. That right there for you makes sense. It should make sense. That's why making the assessment is best. And if, for example, you happen to do 8 trades per day and you're looking to risk just 100, and if you say, let's say, for example, the worst you could do out of those 8, right? Let's say, for example, you miss 5. Well, that's $500 that you lost on those 5 trades. But those 3 trades that you're looking to make render you 900. So you recover your 500 and made 400. And I'm just, obviously those are things that you that's how you want to be able to manage your emotions as well. It helps you manage that part. All right, so we're going to be having the numbers coming out in a few minutes. So to wrap it up, and in a Q&A, the July NFP report will be a pivotal event impacting not just U.S. markets, but global assets. By understanding the 3 scenarios and preparing specific strategies for equities, commodities, FX, and crypto, you'll be well positioned to capitalize on market moves while managing your risk. All right, so let me finish the sharing here of it. Go back to sharing with you the charts. All right, here we go. So let's talk the bread and butter of what we're here for. All right, so in about 6 minutes, we should be having that number coming out, and we'll see, obviously, things flying. Hold on, let me see. A second. All right, so let's take a look at the charts in front of us. All right, so this is the way that I like to analyze the charts. And since we are on the first day of the month, even though it's a Friday, TGIF, I like to look at the overall trend for the market, right? Long-term monthly chart, we want to take a look at what's happened we can easily come here and identify that the market is on an uptrend, right? That we are in an uptrend, and you can create a channel by cloning the angle of that line and placing it on top, trying to make as many wicks as possible to touch. Sometimes you adjust that top channel, that top line. So we could do this like so. We also have the Bollinger Bands here, the upper band, giving us that level of resistance. And we can come in here and see that the market is in an uptrend. That's easily observed. After on April 1st, oddly enough, when Trump came in and gave that particular number or that deadline that he's gonna obviously come in and do tariffs and apply tariffs and slap tariffs on all in the entire world, and then he started with the taco trade. Trump always chickens out, and the market rallied. It did obviously retraced a formidable amount, 431 points. Was a change, but it did close in the green, giving the market momentum to the upside. So today we have the NFP reading, which will obviously prompt Powell to come in and do something. So also Trump, on his particular tweet that he made on Social Truth, he's saying he's looking for the board to take over. If the guy doesn't actually do any cuts. So that's something that you want to obviously keep in mind. Now, once we have obviously a direction of the market, which in this case is up, then you want to come down here and apply those levels, that the swing highs and swing lows. Initially, it could be a level of resistance and support. Now, the typical price, which is the formula used for a typical price is by adding the high, the low, and the close. So in this case, 23,843 plus 584 plus 23,325 equals, divided by 3, that should give you 23,250. So the typical price for July was right around here, and that could be a pivot point. So let's identify that pivot point. Let's change the color so we can know it's a pivot point. Then let's place that particular value. All right, so the number has come out. Let's see what the number should be reading coming out now. So we have a typical point for the month of July. You can follow that, use that typical point to find the usage of finding support and resistance, or that the market will trade around this value. So let's see what happens. Let's go down to a daily time frame and see what this market will do. So for the July's report, the July jobs report, unemployment also plays a big role in this scenario. It's going to be, it's coming out now. Hold on for a second. So we are seeing a retracement. So July non-farm payrolls, 73,000 versus the 100 plus K. So 73,000. The low of much lower reading, right? Because we were expecting that we were going to be having a consensus reading, but we have much lower, 75K. All right, I have placed on that. Then we're looking to go long, buying dips favor growth sector on the NASDAQ, go long on the S&P, going long on the Dow, sell on eager demand worries for crude oil, nat gas, mild short demand fears dominate, gold, go long on silver, wait for confirmation on copper, rebound after the Fed driven upside, Bitcoin going long on the currencies and short the dollar index. So let's take a look at the markets on an hourly chart so we can see. Let's take a look at what the dollar index is doing. And look, you see that drop, tremendous drop on the dollar index. Currencies going long. Wow. Move to the upside. Copper, long. Silver, long. Gold, long. Nat gas, knee-jerk reaction, whipsaw. Crude oil, long. The asset, the Dow, we suppose is recovering. It's recovering. So it was a swing low, but it's recovering because it did open lower during the London session. It could have been profit taking, obviously, and then we obviously have the S&P looking to move higher. Also, again, NASDAQ is about to. So this right here is, I like to call it a coffin of congestion, basically, of equal high, equal lows, and the breakout. So let's take a look at a shorter time frame so we can come in. That's the pivot point that I was telling you about, that we have done that. So the consensus obviously is to go long, right? We've bought the dip. So will the market, even though on the knee-jerk reaction, the market dropped, and that's the knee-jerk reaction that we were looking for, right? We were expecting that if the real was much lower, and boom, that's where we have bought the dip. So our target, we can come in and use psychological values. So support 23,000, initial target 23,200. We can use the typical price or the pivot point for 23,250. So let's see how much lower will this trade. Okay, actually the S&P dropped dramatically. So the reading was lower. That was in this 5 minutes. We said that, by the dips. So it made a dip. We continue to dipping. Then we have crude oil. Let's see what will be. Now take a look at the other assets. Oops. Nat gas trending lower. So 370, 6. Support line. 50-day moving average. Let's see if that would be the case. Oh boy, gold's just, it is really moving higher. Parabolic movement to the upside. Silver as well. Copper retracing in this 5-minute candle after making a nice jump to the upside. Bitcoin moving higher. Whipsaw over here. The euro, wow, nice spike on the euro. Nice spike. The pound, what a spike on the pound. And the dollar index, it is tanking. So we have that 99 points of 99 value for the dollar index. Let's see if it'll break that support. and then continue to move lower. I mean, that is a pretty low reading, 73,000. I was shy by 2,000. So that was the consensus reading for that. So let's drop here. So that movement to the downside, it sure is seen on gold. On this parabolic movements, this is where FOMO needs to be best controlled. This is where it needs to be best controlled. All right. All right, cool. Does anyone have any questions? Can you type in a yes or no on the chat? Once the dust is settled, 15, 30 minutes, let me go back to 1 hour, the 1 hour chart. Because we want to be able to obviously come in and speculate where the market will take us from that after such movement. And then we have obviously the US Open, and right about 40 minutes, actually 60 minutes, 50 minutes, sorry. So let's see what will happen there when the market opens. One thing that one of the many ways for us to come in and understand how we can trade, or the tools that we can use, the fib retracement tool and the trend-based fib extension tool are tools that really help us out when it comes to trading. So let me speak to you about real quick. Let me speak to you about a particular scenario. Let me share something else. Okay, hold on for a second. All right. So let's talk about Fibonacci numbers. Okay, Fibonacci numbers. Hold on for a second. All right, so Fibonacci numbers. So for those of you who aren't familiar with Fibonacci numbers, let me just get to the slide. All right, for those of you who are not already familiar with the name Fibonacci, you may have seen the famous painting of the Vitruvian Man by Leonardo da Vinci. Now, this painting has been known to illustrate how Fibonacci ratios appear in the human form. The Fibonacci number series and the properties of this series are not man-made. They are man-discovered. Okay? They were discovered by famous Italian mathematician Leonardo Pisano. And the Fibonacci number series starts basically with a 0 and a 1, right? With the next number in the series being derived by adding the prior 2. So that's 1 plus 1, 2, 1 plus 2, 3, 2 plus 3, 5, 3 plus 5, 8, 5 plus 8, 13, 8 plus 13, 21, out to infinity. Okay? Out to infinity. In the relationship between numbers in the series, you will find that the ratio, or the golden ratio, the 1.618, or what is called the golden ratio, golden mean, or golden or divine proportion. Also note that the inverse is the 0.618. So when you're using the Fibonacci numbers, the golden ratio is 1.618, and the inverse of it is 0.618. Is 0.618. So it makes sense, right? Now, the golden ratio can be found in many different places. The 1.618 ratio is used in architecture in what is called the golden rectangle, and it is known to be pleasing to the eye. You can find the ratio in nature. It can be seen in flowers, the Nautilus shell, ammonite fossils, and many other places. Now, what I find the most fascinating is that this ratio shows up in the pentagram. Now, which is known as a symbol of hidden occult knowledge. It occurred to me that maybe the ratio within the pentagram held a hidden secret to the market. Now, we can find this pentagram in the Disney cartoon called Donald in Magic Land. And Donald has a pentagram described on his hand in this cartoon, which was produced to teach children about math. Donald Duck was on an adventure in Magic Land where he visited with Plato and Pythagoras, talked about secret mathematical societies, and learned about the golden section. The cartoon illustrated where the ratios of 0.618 and 1.618 exist in nature and in architecture. So this cartoon, which was released by Disney back in 1959, still available via the internet, it is well worth watching. The quote at the end of the cartoon was from Galileo, right? Galileo was a mathematician. We have the Nautilus. And so the guy said that mathematics is the alphabet in which God has written the universe. That's what Galileo said. All right. So from this, what is important is that to most traders is that applying these ratios can help identify key support and resistance zones in the market, and therefore determine key trading opportunities or setups. And I'm going to show you how to apply these ratios in any market with adequate data. All right. We will not use the Fibonacci number series to analyze the markets. Instead, we will use the ratios derived from the Fibonacci series to analyze the markets. Instead, we will use the derived numbers so that what we do with these ratios and how do they help us trade. So the main ratios are going to be 0.236, 0.382. The golden ratio, or the inverse of it, 0.618, 0.786. Now, people you will see the 0.50 on there, but it isn't a Fibonacci. All right, so we have a question in regards. Let me go back to the charts so we can take a look. Hold on for a second. Let me go back to the charts. All right, do you see my chart? All right, cool. So let's take a look at gold. Fantastic, thank you. All right, so gold, let's take a look. We're in 1 hour, so let's go down to the 5 minute. Okay, so in this 5 minutes, the gold is showing us that it's walking the upper band. This is a positive, strong momentum to the upside, right? We've more than done the breaking the resistance levels. So now let's use the trend-based fib extension tool. We want to come in, measure this whole move to the high and to the next higher low, and then on for a second. Where did it go? Place this puppies here. Okay. All right, cool. So using the Fibonacci gold trend-based fib extension, we want to be able to use these targets, right? The numbers, the golden ratio, which gives us a target. Now, at this moment, the market has done 15 minutes and looking to continue its trajectory to the to the upside. We are in the overbought territory in here, right? So if you are looking to go long in this 5-minute chart, your targets will be those Fibonacci sequence numbers that I just spoke about. Okay. Take a look at the dollar index at the same given time. Is it continuing to drop? It is. It is. So that will, you will see a correlation in gold. So as you enter the market, your first target will be 3,348. If you are continuing to be bullish, then the next target will be 38, the 0.382%. And as you hold your position longer, if the momentum continues to rise and we still have all of the US session to open in that fluctuation, we will look to go up to as the golden ratio. Now, long term, I mean, if this momentum carries on into the US session open, which it will make sense since the scenario of the NFP comes out and puts pressure on the US dollar and it continues to drop and it's broken that psychological $99 value, then let's take a look at how much lower can it drop. Can it continue to? Well, the next we've already surpassed that 99. So the next level where the dollar index seems to show resistance, prior resistance, which now turns into support, was already taken out. The next one will be this area right here, this zone. So 98.5, and it's coming down hard to it. Right? It's coming hard down towards it. Once it penetrates this level, this zone of support, right, we can continue to speculate that if this drop basically prior to the US session open, and people are already trading in the US actually, it most likely will continue to move lower. And that 98 value, initially the 98.5 value, right, will come back and show us. In this case, I'm going to come and bring down my level of support right around to that low, to 19.5 right here. All right, so it's coming down hard. Gold, nice spike to the upside. Where can we find resistance in this 5-minute chart? Okay, so I want to bring your attention to this particular level here, right here. Let me just widen the level. So we understand that this line right here is a Fibonacci sequence number, right? And it basically has done a confluence. All right, a confluence meaning that the value has touched a place where moving averages have met, and that gives trade signals. That's a signal right there. Okay, so we want to say that, okay, so as this level comes in, it shows us that as the market was dropping, right, it was trying to find support, and it was rejected at that swing high, and it continued its trajectory. So therefore, this is a strong level of resistance, which is now support, and the Fibonacci sequence of value happened to give it a confluence around this level. Okay, giving us more support, or a better reading that the market should come towards it as this number is being digested by more and more traders, and gold being a stable asset where obviously it's a safe haven asset, people will come in and continue to trade on it. All right, so in this particular case, the market has done a small pullback. And in this particular case, let's use the retracement, the favorite, and using the same levels that we use for trend-based fit extension, right? All right, so wait a minute. How much will it retrace? Again, we just make this levels seen. All right, so for the market to show us a healthy rally to the upside, if there was to be that correction, it's expected that the market will come down towards the 38.20 or the 0.382 382 percentage, and from here find that support, find those buyers, and continue, because you understand that this right here is profit taken. Okay, it is profit taken. So that's obviously a reset, right, of positioning for a continuation to the upside. Now let's see how much more of this pull down is applying. We could take a look at the dollar index. You see, it's also trying to find that movement to the upside. It had a pretty wild move here. So 98. Right, next candle, 5 minutes. It is trading at the zero level, but the consensus is to move higher. To move higher. Right. Let's see what is done in the 15 minutes. I'm gonna erase the tools, and it's basically made a double top with the wicks almost making same. Now, if this 5-minute candle closes making equal highs, equal lows, then we find ourselves in a coffin of congestion that I call this a great setup for a breakout or a breakdown. Okay, but it seems to be that the market continues to move lower. Now, there's obviously some other tools that we can come in and use to look at possible continuation of the trend. But for today, let's just stick with the Fibonacci tools. So here we're seeing how the market is just sustaining this sell-off, but profit taking. Let's see if it'll come back and retrace that amount towards this previous swing high, which is now will be a level of support. All right, so it is trending lower. RSI obviously is looking. We're also looking at the RSI to come into the neutral zone. So prior to the obviously the market movement to the upside, we've seen that does settle half an hour already into what the NFP number came out in red. It is a pretty a much lower reading, 73,000 K. So let's take a look at the dollar index. So nice move to the upside recovery. You have to understand that as participants came in and jumped on this drop, right? On this drop, this is profit taken. Because you enter in a sell, and to get out of that trade, you gotta buy. So a particular move from 100 all the way down to 98, that's a lot. That's a whole lot. So it's understandable that this right here is profit taken. Now let's just see how much of this upward momentum or push to the upside is. We were shy by 197 pips of the 98 and 98.5, and that should be coming tested as the market opens. We should see that happening. Let's take a look at the NASDAQ and see how that's doing. So it did a whipsaw. You bought the dip, went long. Now it's also coming lower. Take a look at the S&P. Same behavior as the NASDAQ. The Dow should have also the same behavior. US, the crude oil. Oh, crude oil. Oh, it's too square in this 5-minute candlestick. So $70 was that resistance. It hit above that. So support 64, that was too low. Then we have 69. So basically it's found support at 69.75 in this 5-minute candlestick. So as the dollar index drops, it makes sense that obviously this is around 70, because the cheaper the dollar is, all those countries that buy, everybody has to buy in dollars, are able to sustain obviously those prices. And nat gas, so nat gas actually made a nice movement to the upside, much stronger than crude oil. Gold again. Okay, so gold's steadying around 33.40. Take a look at silver. See silver. I said silver be long. I said on silver to be aggressive, stronger move than gold, and we're seeing that here. Copper, it is making move, but very almost the same momentum as to the upside to the downside, but it's climbing higher. Bitcoin. Okay, so 116. Let me just bring this down. All right, the euro, the currencies, to the upside, 116 target, upper Bollinger Band, first target. The pound, strong move to the upside, parabolic movement. So 132.600 support. I'm gonna choose the upper Bollinger Band. There we have those levels. Excuse me. Okay, so let's go back into it. So half an hour, we're looking for trades. Pound is retracing, profit taking. So dollar index making a bottom here. Ooh, I think this is getting set for another leg down. Let's go back to the NASDAQ. This 5-minute chart. Getting ready to continue its trajectory to the upside. Same as S&P. The Dow also looking 44,000. It's a psychological value that we should be considering. All right. Crude oil, 70. Nat gas, after making that strong move, profit taking is taking place, and it is moving strongly to the downside. Let's use on this level, previous level of resistance. Gold again. All right, so gold is getting set for another leg up. Initial target. I'm gonna tying up my. Actually, okay, no, that was actually the Fibonacci extension. All right, so looking for 350, 365 is that golden ratio. Silver, okay, silver is mighty strong. All right, so profit taken, it's in place. 37 100 ish. First level. Second level, let's just do by hundreds. All right, support, let's just swing low here. Copper. So copper's had a swing low. It rebound off the medium, the 20-day moving average, and the 50, which are crossing. So that's a level of interest, of support. Obviously, let's see, if it can make another move to the upside, or we'll come down and retest that low. Then we have Bitcoin making equal highs. So this is obviously a level of resistance that Bitcoin here is printing on this 5-minute chart. We'll make another attempt at 116, psychological level of resistance. So euro is consolidating, making a consolidation right around 115 and a half. Okay, so let's see if it'll make another leg up. Pound, profit taking, and the dollar index, it is at this moment, it is making a small symmetrical triangle, okay, which is making higher lows and higher highs. And the direction that we want to take for this, since it's dropping, is to the downside. One way that you can come in and speculate the much of a movement will it have is to draw out the opening and therefore come in and say that if it breaks out to the downside, we should expect this movement to come down towards the width of the opening, or to this level here, which is basically 61 pips higher of the 98,500 that we looked at previously. So that should be something that we want to keep in mind. All right, let me see. Does anybody has any questions so far? So dollar index, it did break out to the downside. Let's see how much more of that push we will see. Okay, let's take a look at gold. Okay, making a coffin of congestion, equal highs, equal lows. So there are buyers holding this momentum to the upside, right? There's in this area, right? They're buyers. So we want to be able to see that the market does fluctuate towards it, enters it, and rebounces. It bounces off of it. So momentum is piling up. Obviously the RSI is wanting to trade even lower, but that doesn't mean that just because it's overbought, it's going to tank, right? So let's just be patiently. So we have coffin of congestion here. This area right here is our zone of resistance. In this, well, I mean, it's trying to make what is called a ascending triangle. So the trajectory obviously is to the upside. The previous move is to the upside. So if we do break out of it, or when we do break out of it, that's your target, and we broke out of it, and there it goes. It's moving higher, moving higher, moving higher, moving higher. We had initially used our trend-based fib extension, right? Measuring this move to the upside. And it was at that given time where we're here, and it was somewhere around here, yeah. So that's that 3350. That's our target, initial target, right? And the opening of the triangle hits us right below that 38.20% level. That's, we should have some fun. I mean, we are having some fun because taking this trade as they broke out of the triangle to the upside is looking profitable, depending obviously on the lots that you're trading. That would have been essentially. So initially, let's leave that there. I'm gonna remove the. We have that there, right? Let's see what. All right, so here we go. Dollar index dropping. Move to the higher, strong move to the on silver. Okay, well, being bullish and being aggressive. If you go long, your initial target will be the previous swing high. Copper is just fluctuating within the range. 438. This is a pretty strong swing low. Bitcoin 116 have been met. We had to talk about that particular level of resistance, psychological. So it broke out, and here again another triangle, ascending triangle has been formed. That would have been a great setup. It's very strongly defined. So how much of this move can we come in speculate? All right, so where are my levels of resistance? All the way up here. All right, let me bring this down. There. That's a target for Bitcoin. The euro getting set to make another move to the upside. Coughing of congestion, equal highs, equal lows, breakout to the upside. So 115, 762 is our target. Take a look at the pound. Also continue to move to the upside. And the dollar index is pushing lower. 90.5 most likely will be met. We have that low there. Take a look at crude oil. All right, so crude oil was making a symmetrical triangle, but this swing low here is almost the same as this previous one. If you look at it, swing high, just gonna touch it here. It's just way too much, too tight. Don't like it. No trading there. Obviously, this is looking to break out. It's that 70 level is being sustained. All right, so nat gas is dropping. Okay, so with this said, nat gas mild short, demand fears dominate. So after that swing high that rally to the upside, it is shortened. It's swinging lower. All right, so we've met our target for gold using the fib extension tool. 350. Now our next target is the opening of the ascending triangle, which is 355. Holding that trade, profit taking obviously is happening. So the market did a throwback to what was a resistance. So let's take a look at this. So the market came and did this, fluctuated higher, right? Fluctuated higher, then came towards the resistance, which is now support. That's a throwback. And now we are looking for the market to do what? Another move to the upside. So that throwback profit taken, right? And our target is that particular level. So now we just move that resistance to that part. That's where we're going. That's where we're going. The market reaches that level. Our next target, we can use psychological values, 360, and this is the golden ratio. So that's your ultimate goal to reach here. Now we can speculate that the market will continue to move higher. We busted out of this zone, so let's take that out. So we busted out of the ascending triangle. Let's take that out. We are still yet to meet the extension or the range of that ascending triangle, which is this line, so this resistance level here, right? All right, so let's take a look at other assets. Let's see how the NASDAQ is doing. All right, so it's going to sell off. So is the S&P. These are pretty choppy here. All right, so it's looking that the crude oil is looking to break out. I mean, I see it as another ascending triangle being set here. How much of that movement? RSI is not yet entered the overbought territory, so it could still be an interest place. Not gas after making that high, swing low, profit taken, rebound up the 50-day moving average. Let's use this previous low here as a profitable level of support. Then we have here. So how long an intraday should hold positions? Well, that is going to be dependent by your risk tolerance. Okay, so right after you meet the data comes out, the dust settles, and you see that the market has fallen into normal trading environment, like we've seen now in front of us with gold. What you want to be intraday, if let's say for example that you missed out, or this right here is the number coming out. So this is dust. This is a settling. Okay, we identify that it made an ascending triangle. So from this moment on, if you entered at 344 at 3,345, we can continue. We can sustain our position because we basically are about to meet that opening of this ascending triangle. So we still have the entire day ahead of us. We will see, like now, red candles, profit taken, right? Profit taken. Now, obviously, we want it to be that, but sometimes the market won't give us that particular level as we want to. So it's really basically about your risk tolerance. You could have entered at a breakout, and that would have been 10 minutes. Okay, some might call that scalping, right? So if you're going to enter the market and intraday, understanding that you will have to come out of the trade before the market closes, then how much of a risk tolerance do you have? If you have that $100, that 1% applied of your total trading capital on a $10,000 account, or £10,000 euro, that would have been 100 pounds from the euros. So are you up? Do you have that 1 to 3 ratio, right? You're risking 100 to make 300. Have you met your goals? You also want to have, obviously, your profit taking goals. Some people actually also add on to the trades. Let's say, for example, you were long at the breakout, right? And you are in profit, but at this on this dip, you came in and added another lot because you saw this dip, and the consensus or the direction of the market is to push higher, right? And we still want to be able to meet that golden ratio proportion that the Fibonacci extension tool gave us at 3,365, right? So you may want to say, okay, fantastic, I added on here, great, going to continue because it fits my tolerance, my risk tolerance. You are in the positive mode. You should be in profits entering at the breakout of that triangle, ascending triangle. So your initial target again is that opening. Once we fluctuate above that, right, and close above that, that has been broken. And then you could come in and use psychological value initially. And then from here, if you are still in the trade, you could consider it adding on another position because your ultimate target is here. So if the ultimate target has been reached, which is the golden proportion ratio, you're gonna want to assess your account again and see where you're gonna go. If you're gonna call it for a day, that's it. I've done my profit taking. I made some money. Fantastic. Over trading is not good, right? And just being patient. Take what the market gives you, trade what the market gives you. Let's take a look at silver. All right, so silver, a coffin of congestion was created, consolidation, and a breakup. So this 37 and 100 has been broken, right? We did close above that. We are trading below it now. But let's just use that swing high that was made. And support, let's bring our support levels to right around this particular level. I mean, you could use psychological values 37 around it because it crosses the most candles to your left. Makes sense. 37, should the market fluctuate lower towards that? Are we gonna be bouncing off this range? Are we gonna move higher and then come towards that target? We have 37.20, 200. Copper, very tight range, very sharpiness. Don't like that. All right, let's take a look at Bitcoin. So Bitcoin, we didn't reach our target of the opening of the triangle. We actually picked our head above that and went south. So that was a bad trade right there. All right, so that has been taken out, eliminated. So let's erase it. So, but this could be also just profit taken. The euro breakout setup, equal highs, equal lows. 116 for today as a target. The pound also consolidating around 133. Look at that 133. Psychological. Let's use psychological values to help trade. Then we have the dollar index. So the dollar index, it broke out of our descending triangle. We still haven't met that opening, but it is looking to push lower. So it's consolidating, making a coffin of congestion. So we now see a breakdown of this zone, coming to look at making our reaching our low here of the opening. That's the opening of this candle of this triangle here. 98.50 is the target where we should see Bitcoin trading to. Let's take a look at again at the NASDAQ indices. All right, so this was an descending triangle, breaking out of it. If you take a look at it, basically right here. So if that's the case, and if we measure the opening, so are we gonna see this, or are we gonna see this? Are we gonna see this? It's looking to go lower so far. The lower Bollinger Band will be a level where we should find buyers, as we see here, in here. So let's see if this move lower is already died, or are we gonna continue to move lower? Great, great, fantastic. Congrats, congrats, congrats. Yeah, it's consolidating, and this on this in this 5 minute chart, it is consolidating. So, but we still have the momentum to the upside on our favor. Obviously, RSI is still quite overbought, but let's see if you stay, or we come back later on today and see if we've hit our target for the day, which is the golden proportion ratio of 0.618% given by the fifth extension tool. That's our target for the day. I mean, obviously this thing could just also come in and be a sell-off and then just tank all the way back down to where it opened. That's a pretty strong move, $50 move, basically. But it is holding. You see, this is holding, is holding, is holding. The opening was basically met. Now, this is not a 100% science, but you know, and if you look at it, there's not much of technical analysis. I mean, there's one saying, too much technical analysis causes trading paralysis. That's what I've learned. So you don't see my charts being overfilled with this. Awesome. Awesome, awesome. Awesome. That's a nice move. Great. Congrats. Hope to see you around here. I'm going to be doing this. Today is the first day of doing this live trading session. So the mechanics of it is going to be that I'll do. Hey, there we have the market is open, US session open. So I'll be here Monday around 8 o'clock in the morning, half an hour prior to the US session open, and talk about looking at the market, analyzing, and talking about setups. Thank you for joining me. See you next week. Have a nice weekend. All right, cool. So let's continue. Let's continue looking at the market now that we have the market open. All right, so the market is basically consolidating right around this level, 3,350. Our initial target is Central US time. So I think that's 5. What time do you have right now? What your clock says? Because I'm right now I'm 8:30 in the morning where I'm at. So half an hour before this. So half an hour every single day, Monday through Friday, half an hour at 8 o'clock, or half an hour before this time that you have. Let's take a look at silver. All right, silver, taking a look at an ascending triangle. Let's see if it'll break out of that to the downside. Profit taking If it does, our level of support is where we should come and speculate. That will be in, and it's basically doing that right now. So it's dropping. So 37 is our target. All right, so at 1600 your time. So every single day, Monday to Friday, at 1600, I'll start. It's gonna be a live, and this is basically what we're gonna be talking about, depending on what happens. Like today, I started earlier because the NFP came out earlier, and that's why I started. I started early, but every single day, Monday to Friday, at 1600 your time, basically 4 o'clock your time. All right, so that breakout is happening now. Silver is just pushing lower, 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 lower. Let's see if we find that support here, and it rebounds. Oh, penetrated that support. So it's gonna be taken out. 37 is psychological. It's steady. Obviously, the U.S. session opened, so those who were long want to come out and take out and just take some profits out. So it's penetrating it. It's violating that level. It's violating that level. Let's see if it rebounds off of it. It seems to do so. Now it's above it. So it's above that. Okay, cool. All right. So it's looking to move higher. See if it'll bounce off of it. All right. So copper. Oh, bull bearish momentum. Bitcoin just tanked. So it did a breakdown, and it broke to the downside, surpassing the 50-day moving average. All right, so then we have here the euro hitting our level of resistance, which would have been a target for us. So let's see how much higher will that move. The pound, it is sideways trading, consolidation, coughing up congestion, possible breakout. We are overbought. However, dollar index. All right, so the dollar index has met that level and is continuing to move lower. So it has surpassed the opening of the symmetrical triangle, target 98.5. Should it break that, it most likely will continue to drop towards our psychological value of 98. So let's see if that will be the case. Let's see how much momentum to the upside has gold caught on this momentum on that drop of gold of dollar index. So it's moving higher. Take a look at silver. All right, silver breaking that psychological value. So next level, let's look at previous swing lows. So this one right here. See if it finds that support at that level and then reverses and moves higher. Take a look at copper. Ooh, pretty wide candles. Bitcoin. So looking to retrace, looking to recover. On the euro, we have finally broken out about that level of resistance that we have here. So that will turn into a support level. Our target is 116. That's what we should be looking for the euro to go towards and find that resistance. 116 psychological. Now we have here our level of the pound. Ooh, looking mighty strong. Well, because of this move to the downside on the dollar index. Again, we understand that if the dollar index drops and you have the pound against the dollar, well, the pound is going to move higher. When the dollar index moves higher, well, the pound will move lower. All right, so pound 133 psychological, trying to sustain itself above that. It's been rejected. see if it'll catch another leg and close above it on this candle. This 5-minute candle. Nope. All right, NAS. Ooh, fluctuation to the downside. So violated our psychological value of 23,000. Let's see if this dip will be enough for our traders. So initially, out of that particular descending triangle, we first did a breakout on it, and then a breakdown, and it continued. So this is done. This is done. All right, cool. So for those are aggressive, buying the dip, support. Now resistance will be, I'm gonna use the medium of the Bollinger Band. We do have the 50 moving average right above it, so that'll put some pressure if it does reaches back up there. All right, so S&P is dropping, has dropped as well. Dow continues to drop. All right, so crude oil have actually broken out to the downside, broken down to the downside. Let's see what happens to crude oil, not gas. All right, so it's consolidating. This candle has 40 seconds left of life in it. All right, back to gold. All right, so gold has retreated from that breakout back into range. So we found this level right here, this zone right here. This is where we should come in and have this particular asset come and find support. Because obviously it was a previous resistance level, now turns into support. It's looking to, yep, it's dipping into it, and it is basically rebounding. Let's see if it holds or will penetrate it some more. We still have 5 minutes left on it, so let's see what will happen. All right, so let's do a last run on the assets. Silver seems to be looking to make another leg down. That swing, the previous swing low, has made itself clear that buyers are around here. Then we have copper, just wild moves, shoppiness. Bitcoin continues to slide. It's way below our level of support, 115,000. Let's see if that will be the case for Bitcoin. The euro, all right, so the euro trading back into that level of congestion. The pound should be also retracing. Yep, and the dollar index is looking, so it did came out and found support at the 98.5. Psychological, it rebounded off of it, reversal move to the upside. As we spoke about on sharp drops, short USD target technical support, 98.5. Done. All right, well that'll be it for me today. Thank you for watching, and I'll see you on Monday at 8 o'clock or 1600 hours for Europe, right? Half an hour prior to the US session open. I will be talking about the market, identifying level of support and resistance from Monday through Friday, and talking about obviously some tools that we can use for trading. Thanks for watching, and I'll see you next week. Have a nice weekend.